Good morning, everyone. Um, Today we're doing an analysis. It's a very important day. We finally have the expiration of all the options. This deadline that we have seen in the last few days, last 2 weeks, has created quite a bit of immobility in the market. So markets that have moved, apart from yesterday, which was extremely close cash, have moved much more than all the other days, but basically the markets are still probably due to the Fed event on Wednesday, due to the deadlines of the quarterly options today and futures, the rollover and so on. So today we finally get rid of these expirations, and then we'll see the market finally free to show how it will behave. At the moment, the macroeconomic and geopolitical situation remains very uncertain because from a geopolitical standpoint, there are still tensions between the US and Iran. There is talk, let's say, of the possible assassination of Khamenei and then retaliation from Iran with nuclear bombs. In short, there's quite a bit of confusion from a geopolitical standpoint. And then Russia, which has also gotten involved in the discussion basically regarding the issue of the German missiles that they want to give to Ukraine. In short, there's confusion and there's definitely tension from a geopolitical perspective. From a macroeconomic perspective, this morning, the retail sales data for the United Kingdom was released. Retail sales have significantly worsened. There was already a forecast for a decline, for example, a year-on-year forecast of 1.7%, but it actually came in at 1.3%. Month on month, the forecast was 0.5%, but it turned out to be 2.7%. So even from a macroeconomic standpoint, things are definitely not going in the right direction. If from one point of view this situation goes, from the perspective of inflation, it is certainly a positive aspect. However, from the point of view of the stock markets, it is obviously not positive at all. The only positive thing is that in any case, the ZEW, the German Confidence Index, grew much more than expected this week, just like the sentiment index from the University of Michigan last week, which for the first time has risen, let's say, after the past few months. So let's say there is a positive sentiment, but the real economic data are absolutely not positive. That said, let's now analyze the markets with our volumetric charts from our platforms and try to understand for a moment what's happening. So the SP, as we saw yesterday, basically broke through and also closed below the 6,700, 6,500 area, okay? So below this very important volume low, we closed yesterday. This is a weekly chart. Remember that. So this is a weekly profile, and we closed right around the 5,000 area, more or less at 5,970. Okay. So a market that has found support on the UAP anyway. You see dynamic of all this distribution. Okay, of the entire distribution we're considering. So it found support both on the VWAP and on the POC of the composite distribution we're looking at. Now, there are two possible scenarios that could unfold, and that's why we need to pay attention to how the markets open today and how they develop during the day, especially in the first hour of trading, because the scenarios that could play out are two. Below the POC here, we see that we have a completely unbalanced area, so we could find ourselves in a market that, let's say, remains fairly volatile, moving up and down more frequently, staying between these two areas, and thus rebalancing this entire distributive area that is currently missing, so to speak. This is, let's say, scenario one, and once it has been rebalanced, it could still move back up and perhaps shift the POC here, thus creating a balanced distribution in this sense with two high volume nodes, one at this level and another at this level. The second hypothesis, which I consider a bit less likely, but obviously not that unlikely, is that the market could break through the 6,500 area. At that point, once the 5,000, 6,500 area is broken, if it creates a very strong area of excitement here, okay? If a very strong area of excitement is created here, the conditions will be set to break the 5,970 level and return towards the 5,910 area. So today the focus absolutely needs to shift to how the volumetric trading will develop and how this weekly profile distribution will, let's say, will be developed, because based on this we will have greater and better clues to understand the next evolution, okay? One thing, however, is certain at the moment. Yesterday the market closed below this level because we closed here, and right now we are above this level, okay? So we definitely have a gap at the open. If the market stays here until the opening time of the US cash session. And we have another one, if I remember correctly, because we still haven't reached the close from 2 or 3 days ago. Sorry, let me check. Yes, we basically have two gaps above as well. So it's definitely a rather complicated situation. The one, let's say, that needs to be closed from yesterday's session. Let's say this is a chart that starts from 2:30 p.m. European time, so from 8:30 a.m. US time. So I consider the gap from that time, from the moment the data comes out. But we also have one that comes from previous days. You can see it here. Here it is, which comes from the 17th. And this one also still needs to be closed. So we definitely have very, very complicated situations, gaps on one side, gaps on the other. We still have a very significant gap down here that needs to be closed, which we already saw yesterday. So here it is. And so the situation, let's say, is quite complex. That's why I say it's very, very important to assess the market's evolution moment by moment to really understand where it wants to go, where it wants to go. A very important level for the SP will definitely be yesterday's POS if we should move back down. So 5,982, 984 will definitely be a level to watch, an absolutely very, very important level. Be careful because you can see that even in the charts, let's say, in the daily volume profiles, okay, the ones that include all trading hours, at the moment you can see that we've had a reverse price action for 4 days now, okay? You can see that we have lower highs, lower lows, and even today's high is still lower. We haven't managed to break, okay, yesterday's high. So be careful because the price action has already been negative, or it's been negative for 4 days now, okay? Including this one, obviously today is still uncertain. We don't know what will happen. So be very, very careful in this regard. As for the Nasdaq, the situation in terms of the weekly volume profile and distribution is practically the same. I find it more useful to look here, okay, at this chart, okay, which shows us in the short term the movement of the Nasdaq, so we can understand the important levels we need to monitor. Certainly, the important level to monitor, as you can see, is this one, the first level where it has already been rejected twice this morning, okay, which is the area you see here, 21,960, 21,950. Why is this level important? Because it represents the value area low of the day from 2 days ago, okay? And it also represents an important level, as you can see, of our indicator, the volume analyzer. Notice how it reacted to it this morning and how it was rejected. Now, at the moment, you can see that we are trapped between two dynamic VWAPs, basically. So we have the first dynamic VWAP, which is the one pushing it up from below, currently passing around the 21,800 area, and the second dynamic VWAP, which is around the 22,000 area. But you can see here, let's say the upper part of the market has resistances caused precisely by very strong absorption situations that have been detected by our add-on, okay? And even together with the dynamic VWAP that passes through here, we also have them up here. So you see this whole area, let's say, this entire area here, basically from 21,950 to 22,150 is an extremely tough area to get through, but obviously not impossible. So it needs to be monitored very closely. Whereas, as you can see on the lower side, apart from these yellow lines, which are shift POCs from this distribution areas, except for this support area, the first line of support, the first true support from a volume perspective that we find is at 21,057, again from our add-on, which also coincides with the weekly -3 close and the weekly -3 POC, okay? So be careful because the market definitely faces much more resistance going up than it does going down. This obviously doesn't mean that the market will go down. It means that for the market to be able to rise, it will definitely need to bring in a lot of volume in order to overcome the resistance that has formed from all these resistance zones. So the first level to monitor clearly, you can see here that I've already marked all my levels, 21,960, 22,000, 22,050, okay? And I've, let's say, brought them over from the other chart because obviously I have the option to bring them from the other chart C. Excuse me, with the annotation overlay on my indicators, I have the option with the indicators overlay annotation. Here it is to bring over the indicators I have on the other chart. So if I have charts with longer, broader time frames where I have some interesting zones, some indicators that show me things, I can also bring them over to the short-term chart that I then use for regular trading. So these are exactly the levels that I've marked out. We have the POC from yesterday, which you can see is already created a bounce zone twice today, and the low volume area 21,789, where yesterday there was also, as you can see, a sort of push area that was broken through at the open today. So these are the key levels to monitor and obviously pay close attention, because today is Friday, weekly close, and new futures expirations are coming up. So be very careful, because today the market will likely be quite probably very volatile. With that said, I wish everyone a good day, a great weekend, and always trade with awareness and responsibility, because trading is a very risky activity. Thank you all.